let's check the solution for it. Okay, so starting point of our cash flow statement is cash flow from the operating activity, and first thing which we want from our cash flow activity is net profit before taxes and extraordinary item. So if you see 12,000 is given, how this 12,000 is arrived at? In our reserves and surplus notes to the account, we saw there was given opening profit and loss and closing profit and loss. So if we deduct 28,000 and 16,000, we get 12,000 as a profit, right? 28,000 minus 16,000 is nothing but 12,000. Then we are going to add all the extraordinary item. I told you what are the extraordinary item we have seen in the sum. One was the proposed dividend, right? Dividend, whatever you pay is a extraordinary item. So the current year dividend of rupees 4,000 given under reserves and surplus part, this 4,000 is one extraordinary item, other is a financing activity. Other thing, any kind of provision for taxes for current year. Okay, any kind of provision for taxes for current year. So 4,000 is my current year provision for taxes, is again a extraordinary item. So I'll go and add 4,000 as what? Extraordinary item here, right? 4,000 is added here. And then we need net profit before taxes. Okay, so if we see what is the current year taxes paid, right? What is the current year taxes paid? It is given as what? Under the head provision for taxes. So current year taxes is the last year provision. Okay, whatever you have thought in last year that I will be paying this much taxes will be treated as what? Your current year tax payment. And whatever is your current year balance of provision for taxes is nothing but your extraordinary item. Understand? I told two things. What? Provision for taxes, two figures will be given in the balance sheet, right? One is the opening figure, other one is the closing figure. Opening is treated as current year tax payment, right? In absence of information, when you don't know what is the current year tax payment, you can't deny paying tax, right? You have to pay taxes. So whatever is previous year taxes will be treated as current year tax payment, and whatever is what? Provision for the current year will be treated as your extraordinary item, and it will be added here. Okay, so I'll go and add it. Then what else are there in our operating activity? Once you have added all the extraordinary item, we get something called net profit before taxes and extraordinary item. Next thing is we have to add and less non-operating items and non-cash item, depending. If it is an expense, we will add it. If it is an income, we will deduct it. So for that purpose, one thing we know, depreciation is my non-cash expense. Can I get the depreciation figure directly? It is just given that we have paid the depreciation. So plant and machinery, right? I have been given 2 lakh as the opening balance, 3 lakh 64 as the closing balance, and plant and machinery is my asset. Asset have a debit balance. So my opening is coming on debit side, closing is coming on credit side, and depreciation 32,000. Okay, and whatever balancing figure I would get is nothing but the current year purchases. Okay, so if my depreciation is 32,000 and it is a non-cash expense, I will go and add it back to the operating activity, right? And then I'll total net profit before taxes and extraordinary item, and depreciation I'll get operating profit before working capital changes, right? What are the working capital changes? One was increase in current liability, one was increase in current asset, right? So trade payables got increased by 1 lakh, it is a increase. So if my current liability get increased, we need to add it. If my current asset get increased, we need to deduct it, right? If current asset is getting increased, you need to deduct it. If current asset is getting decreased, you need to add it. Same lines, I have deducted all the current assets which were getting increased. Understand, I am taking difference in a way like opening less closing balances and not closing minus opening. Okay, so if it is 1 lakh and if closing is 50,000, so 50,000 will go and sit here. Okay, so once you are done recording changes of working capital, you get to know what is the cash generated from the operating activity. See, it can come in negative also, right? We also incur losses, right, in our organization. It is not just that we earn profit. In this example, you will see, although we have earned a profit, but for operating activity, which is my primary business or main purpose for which I'm doing the business, I am incurring the losses. Again, since I have added what income tax, I need to treat it as an operating activity. I will also deduct 4,000 rupees. Now, what is this 4,000 rupees, right? We have provision for taxes given in the question, right? 4,000 is nothing but the current year taxes. You have to pay the taxes in current year. Yes. So I will deduct the taxes and finally arrive at what? Cash flow from operating activity, right? So what we have done in the cash flow activity, cash flow from operating activity, one, we arrived at net profit before taxes and extraordinary item. You can prepare a working note specially for net profit before extraordinary and taxes. It is not a problem, or you can show it in your statement. Then we have adjusted the non-cash and non-operating expenses, that is depreciation. Then next thing what we did was we have recorded changes in the working capital. Finally, we arrived at operating profit before working capital changes and we deducted the tax, which is again a operating item, and we got cash flow from operating activity. Now, since the figure is negative, we can't write cash flow. We will be writing what? Cash used in operating activity. Okay.